Hello, I am Krishna. I'm back with new lesson, and today's new lesson is tax and direct tax. Most of the students of grade 10 realize this topic is very difficult and distinct because they have not seen the information of financial matter in their previous classes. Let me clear those queries and questions of the students of grade 10 on tax and direct tax. Let me share the next slide. It is of key points of the presentation. I will be talking four important points in today's class. About tax, I will be talking what is tax. Types of tax I will shortly introduce. About the types of tax. Direct tax, I will be talking income tax, property tax and capital gains tax. Although there are different taxes coming under direct tax, I will talk only these three taxes in today's class because the students of grade 10 need these three taxes for explanation in their examination. And last point, it is special privileges for minimizing tax on salary. This is a very important and unfamiliar point for them because they might not have known what are these special privileges made in our nation to minimize tax on salary of the employees. Let me share the next slide, and it is about tax. What is tax? Tax is a source of revenue to the government, and simply speaking, it is an income of the nation. On the other hand, it is a compulsory financial charge levied by government on workers' income, wealth of citizens, business profit, goods and services. Tax is essential for the nation for the different purposes. Tax is necessary to allocate the amount for the national defense. Amount collected by the government from their citizens is used in the different areas of infrastructures. It is also useful to distribute the salary of government employees, to pay the expenses of ex- nations, as well as to facilitate the citizens with the development of infrastructures like educations, health, communications, transportations, electricity, drinking water, etc. We know that citizens are always in the need of facilities from the side of government, and government tries its best to provide or meet the requirements of citizens so that citizens can realize their living style becomes better. The life of the citizens in the nation becomes better if government utilizes the tax for the right purpose. And on the other hand, we must think that paying tax to the government is the duty of the citizens. It is the compulsory duty of the citizens. It is not an optional duty of the citizens. Sometimes we see citizens are not interested to pay tax to the government, thinking that tax will benefit the government. It won't benefit the living standard of the citizens. So citizens ignore the tax, citizens avoid the tax because of this, these reasons. So government spends it as per the requirement of nations. and spends not spends lavishly or randomly. Government allocates budget for the holistic development of the nation. During the time of distributions of budget on the various economic dimensions, government thinks about the expenditures and income of the nations. After the examinations of the income and expenditures of the nations, government logically spends the amount on the different economic aspects. The another slide of my today's class is types of tax. Many of the students have already known there are two types of tax, direct tax and indirect tax. Definitely there are two types of tax. One is direct tax and another is indirect tax. And what comes under direct tax? Income tax, property tax, capital gains tax. They come under direct tax. VAT, custom duty, and excise duty come under indirect tax. Direct tax is a tax levied on the income and wealth of the taxpayers. It is paid by the taxpayers to the government directly. It is not levied or imposed on the goods and services because there is another tax that is called indirect tax, which is levied or imposed on goods and services. Under direct tax, under direct tax, I will be talking today income tax, property tax, and capital gain tax. Indirect tax, although there is no discussion under indirect tax in today's class, but I have to provide you very simple and very short information about indirect tax. Unlike direct tax, indirect tax is imposed on the goods and services, and it is paid by the taxpayers to the government indirectly. Citizens or the taxpayers don't pay this tax to the government directly because it is paid on the purchase of goods and services. Example of indirect tax are the custom duty, VAT, and excise duty, etc. I can give you an example. Suppose if you go to a restaurant to eat something, service tax is already included in your bill. You have to pay service tax to the restaurant owner, and later the restaurant owner pays it to the government. So indirect tax is paid via third persons to the government. So this is about the types of tax, and let me explain what is direct tax. Direct tax is a tax which is levied. Levied means imposed on the income and property of taxpayers. Taxpayers may be persons, institutions, corporations. Anyone can become a taxpayers. And direct tax is always imposed on the income of the taxpayers. Those taxes whose burden and liability falls upon the same person. Its impact and burden cannot be shifted to another person like an indirect tax. Taxpayers pay it directly to the government, and it cannot be shifted like indirect tax. It means on whom it is levied bears the burden of this tax, and it is on the wealth and income of the taxpayers instead of goods and services. One thing in direct tax we can see, tax avoidance is possible. Citizens can deceive the government very easily because if the policies and strategies of the government are not so strong and solid regarding collecting the direct tax from the citizens, citizens themselves may not pay the tax to the government. So government is deceived by its citizens very easily from this direct tax. So it means evasions of direct tax is easy. Yes, right now government of Nepal has executed or implemented PAN card to each and every employee of the nation. Through this PAN card, government will easily identify the salary of the employees. It will be easy for the government to collect income tax from the employees through this PAN card. Direct tax is always progressive. It is called a progressive tax. In what sense it is called a progressive tax? The more the person earns, the more the person has to pay tax to the government. So it is called a progressive tax. Let me share the next slide. It is income tax. It comes under direct tax. Income tax is the tax levied on income earned by a person. This is the definitions of income tax. And income tax is a tax on which somebody pays on their income. Income tax is a tax which you pay on your income. Anyone can be a taxpayer. Either person can become a taxpayer, employees can become a taxpayer, employer can become a taxpayer. So income tax is a tax which you pay on your income. In accordance to your income, you pay tax to the government. And there are tax, two types of incomes: real income and taxable income. Real income means the actual income earned by a person, and taxable income means an income on which tax is payable. From the first definition, let's see the first definition. Income tax, the tax levied on income earned by person. We don't think that government levies tax on the real income of an individual. Government never imposes or levies tax on the real income of the individuals. Government only imposes tax on the taxable income of an individual. So let me clear what is real income and taxable income. I have brought one example. Suppose an individual earns 50,000 per month. His annual income will be automatically 6 lakh in a year. His real income is 6 lakh and taxable income is 2 lakh. What does it mean? Real income is 6 lakh. Yes, as we have already defined what is real income. Real income means an actual income earned by a person. 6 lakh is his actual income. And why is 2 lakh rupees is taxable income? In accordance to the fiscal year 2076 and 77 in Nepal, up to 4 lakh rupees tax is not imposed. If an individual earns 4 lakh rupees in a year and he is bachelor or unmarried, he is free from the income tax. Although there is 1% tax on his monthly salary, which is called social security tax, apart from it, it is not necessary for him to pay tax to the government if his income is up to 4 lakh rupees. Now, in example, I have brought 6 lakhs rupees. It means 2 lakh rupees is its taxable amount. And now government levies tax on his 2 lakh rupees. In accordance to the fiscal rule, government levies 20% tax on the taxable income of the concerned person. And taxable income means an income on which tax is payable. In the beginning, I said you that government does not impose or does not levy tax on the real income of the persons. Government always imposes tax on the taxable income of the person. So I think you might have understood what is real income and taxable income. In the next slide, I have given you an example of our country. In the context of Nepal, individual with an income of 4 lakh rupees are exempted from payment of tax. But in case of couple, the exemption limit is 4 lakh 50,000. If there is a couple and their income is up to 4 lakh 50,000, then then they do not need to pay tax to the government, because exemption limit for a couple in Nepal is 4 lakh 50,000, and in case of bachelor it is 4 lakh rupees. And I have mentioned there is 1% in the first point. 1% tax is to be paid by the employees to the government monthly. It is called social security tax. And if the income is above 4 lakh rupees, the following percentage are mentioned in the last fiscal year. Suppose if an individual earns 5 lakh rupees, 5 lakh rupees is his real income, and taxable income is 1 lakh rupees. Government levies 10% tax on his 1 lakh rupees. And if we calculate 10 percentage, then it will be 10,000. An individual has to pay 10,000 rupees to the government as an income tax. And that other percentage are also mentioned in the slides. In accordance to this percentage, individuals or employees have to pay tax to the government. In the next slide, I have mentioned special privileges for minimizing tax on salary. Employees, they can save their income tax from these special privileges. Although there are other privileges as well for minimizing tax on salary, but I have mentioned only four types of four privileges that are commonly used by the employees of our nations. Provident fund. What is provident fund? The another name of provident fund is pension fund, and its purpose is to provide employees with one single payment rather than in installment at the time of exit from their place of employment. That is provident fund. And using provident fund, someone can minimize tax on their salary, on his or her salary. Second is citizen investment trust deposit. Citizen investment trust deposit is also a special privilege for the employees. In this privilege, employees can collect fund or salary to collect the fund or to save the money for their future purpose. The amount deposited in citizen investment trust is exempted from the tax calculations. They can collect capital or fund from their salaries in the citizen investment trust deposit. Later, during the time of their retirement, they can accumulate the money from the citizen investment trust. If they wish to withdraw the money before the retirement, they can take it in the name of loan. Citizens Investment Trust provides employees the money in the name of loan with certain percentage interest. If citizen or workers do not withdraw their money from the citizens investment trust, they can get certain amount of interest of their deposited amount. And the third one is insurance up to 25,000 annual premium. 25,000 annual premium is deducted from the taxable amount of the individuals. It is also very useful for minimizing tax on salary. And the fourth point is medical bills up to 750. These are the provisions, or these are the special privileges for the employees for minimizing tax on salary. And the last slide of my today's class is about the property tax and capital gains tax. Property tax also comes under the direct tax. It is charged on the houses and lands of citizens. Uh, Let me tell one more important thing. In income tax, citizens can um, earn income from the various sources. What are these important sources? Income from salary, income from business or profession, rental income or interest income, gains from selling shares and properties. These are the ways of earning income. And government imposes or levies tax on the sources, on the income earned by a persons from the various sources. So here is a property tax. Citizens of our nations pay tax to the government annually. It is a tax of their house, it is a tax of their land, and it is a tax of other properties as well. And this tax is also based on the amount of property that somebody has. The more the property somebody has, the more the tax he or she has to pay to the government. So sometimes direct tax uh, uh, is promoting social equality. It is not based on it is not based on partiality. It is based on impartiality because it promotes social equality. Because the more the somebody earns, the more he or she has to pay tax to the government. And in the same case, the amount of property that somebody has, the more the property, the more the tax he or she has to pay to the government. So that is why direct tax is also called a progressive tax, and it is promoting social equality as well. And capital gains is also a tax which is charged when an individual sells assets such as stocks, real estates, and business. It is called capital gains tax. So this is the class of today's. Thank you for watching this video.